Welcome back to Lamb's Cryptoverse and my never-ending cold. So today I want to discuss what's going on with miners. There's a lot going on, and I'm sure of people catching in the news because Mark Zuckerberg's getting all their attention these days, as well as Kanye West. But what I want to talk to you about is this. Little boring. It's an SEC release, 8K. But today, Core Scientific said, actually, I highlighted it for you. They said all this junk, but then they said, discussions, they're having discussions. And furthermore, the company may seek alternative sources of equity and debt financing. That's not really what's important. But then if you go towards here, and potentially could seek relief under the applicable bankruptcy. So they basically said they may go bankrupt, and I didn't expect it so soon. And it says here as of October 26, they held only 24 bitcoins, and that's down from 1,051 bitcoins held only a month earlier. So that's pretty bad. So they're unloading Bitcoin like crazy to remain solvent. Now, what I wanted to talk to you about was a video I did after this came out. This is Pooln on CoinDesk has reported that Pooln, the largest Bitcoin mining pool, might be having a liquidity issue. So at that time, I did a video, and I'll show you, not that one, this one, that this miner capitulation is not happening. Well, you know what? Maybe I was wrong. I think we're at the tipping point of miner capitulation, especially if Bitcoin goes down in price during the next few weeks. And why? Well, I already showed you. Number one, Pooln's having issues. And number two, Core Scientific is having issues as per the 8K here. But here's the thing. You need to know what the structure is of the mining industry. And I took a look at that because I did a video on mining production costs. And what I noted is that miners, they want to always show that they're at the lowest cost, right? And they're basically, I think they're obfuscating their business. If you look at their slides, almost all the miners show you much lower numbers, production cost numbers per Bitcoin. Like they're showing that the Bitcoin cost is something like $10,000 per Bitcoin when it's not. What they're showing you is their forward next grade ASIC Antminer machines, their mining rigs. They're showing you their forward cost. And here's the problem. I think the mining industry is like the energy/fracking industry back in between 2010 and 2015, when all this money went into fracking. And the problem is, it's just human nature to take investors, to take your money. There's a fear and greed, right? And so they took all the investors' money, and I'm not just talking about the frackers. I'm talking about publicly trading mining companies. They did debt and equity financing, and they're going to spend every penny, even if they cannot afford it. And that's where it gets touchy. That's where it gets dangerous. Even if they cannot afford it, they will spend every single penny on becoming the largest mining company, and so that they can become winner take all, lowering their cost, operational efficiency. There's another name for that, economies of scale. But the problem is, and this may be hard to believe, but it's happened before with the financial crisis, where the banks, many of them, or some of them, went bankrupt. Basically, companies should, but they don't, act in their self-interest. They should spend enough until a certain point and then stop because they know that's not in their best interest if they go bankrupt. But in real life, that doesn't happen. Greed tends to overcome the executives at these companies. And so I think the same thing is happening in Bitcoin mining, proof of work, as is happening in fracking. Now, I'm going to go show you a little history of that. Basically, there was a new technology, if you don't know this, called fracturing or fracking for short. I'm not sure when it started a long time ago, but it really began in earnest when there was all this debt equity financing. So let's say it started in earnest, I don't know, back in 2010, and the prices are still pretty good in natural gas. And this also was in an oil industry. It wasn't just natural gas fracking. It was also, you don't hear too much about oil, but there's also oil that came out of this too. So, but I'm going to focus on these frackers. So you could see what happened here. Average price of natural gas is about $6, but it plunged to under $3 to as low as $2.50, actually lower. It plunged to $1.63 by December 2015. And then you saw all these bankruptcies in not just natural gas frackers, but in oil companies, because oil prices also went down, and the oil companies were also doing this fracking method. And you could see here, I'll just move myself here, you could see that the high yield option adjusted spread, which is a measure of credit risk, soared from 350 basis points way up there to, I guess, 900 basis points. Now, this includes all industries, but the majority of this, I'm trying to remember back, it was about 70% of this increase in yield was due to energy companies, fracking companies. And the man behind that was this guy right here. You remember him? This guy, the former Chesapeake Energy guy, Audrey McClendon, who donated a lot of money, maybe billions, but he also did a lot of bad things. But he was the man behind this fracking industry. And what happened was he got in trouble for, besides crashing the industry because he overspent and leveraged this company as well as another company he founded thereafter. I think he got kicked out of Chesapeake. Basically, after this indictment, he crashed his car, and just like the industry, ended in a fiery crash, and basically he committed suicide. So why am I telling you all this? Because I think the mining industry is going to crash and burn too. And that's when you're going to see real capitulation. Now, there's a lot of problems with miners. I told you a few of them. One, that they're just spending everything until they go bankrupt. And number two, the hash rate is hitting all-time highs. And if you want a definition of that, a few of my subscribers said they don't know what I'm talking about when I'm talking about difficulty, hash rate. So here's a definition of hash rate. It's basically the total computing power. So when there's more of those Antminer rigs going on, calculating and solving the puzzle to get their Bitcoin. So when there's more of those mining rigs, total computing power increases. And so now we're at an all-time high. So when it's at an all-time high, that's not a good thing for Bitcoin miners because it's getting more competitive. And then I wanted to show you this one. Mining difficulty from Glassnode also hit an all-time high. So there's all these factors. There's a confluence of factors making it more difficult and more expensive for miners. And this chart here kind of puts it all together from Glassnode. What they did here is they showed their cost of production, which I don't agree with. I think it's higher. I look at an all-in cost of production, and I don't agree with the way it's calculated. It's calculated implicitly using, like I said, a regression model. But the point is, it's showing that the price of Bitcoin, and that's here in black, is basically at the cost of production we're on now. And the pink line here is showing, you could see here, maybe I could expand that so you could read it, that the difficulty multiple, the difficult price is below the spot price. So that's no bueno. That's not good. And so we're in a bad situation right now. And here's the problem. So just follow me. Let's go back so I don't confuse everybody. I said number one that Bitcoin miners are like the frackers that made themselves go bankrupt because they did debt equity financing. They went bankrupt. They overproduced natural gas and oil, and then the shit hit the fan. And miners did the same thing in Bitcoin, and they caused their own demise because, it's still starting. I think we're at a tipping point now. So they're putting out all these rigs. All these rigs are running. The hash rate's at an all-time high. And because of that, they're in bad shape, like we saw with Core Scientific. They're in bad shape. They have no dollars. So what they have to do, and here's my next chart. This is what I'm leading to. They may have to sell their Bitcoin, and they have a lot of Bitcoin. So this chart is showing that the miner balance has gone up 10 times since October 2019. And you can see here, it's gone from, I don't know what that is there, 10,000 coins or whatever it is, to 78,000 coins. It's huge. And if you can't get a hold of this, how much money that is, you have to calculate 78,200 BTC times the current price of BTC. If you did that, you would get $1.5 billion. So this is a huge overhang, I should say, meaning that if this crisis continues, miners are going to they have no choice, they're going to have to sell all this Bitcoin, and that's going to further suppress prices. But it's a reflective self-feedback loop, right? Because think about it. If the price of Bitcoin, it's not just a cost problem, it's a revenue problem. Because if the price of Bitcoin goes down, that's going to cause more problems at the miners because their costs are too high and they spend too much. They have no money to spend it even more. They have no cash, basically, nor US dollars, that is. But they do have Bitcoin. So if the price of Bitcoin goes down, they're going to have to sell Bitcoin to remain solvent. But think about the self-feedback loop. If they do that, if they sell the Bitcoin to remain solvent, the price of Bitcoin is going to go down more. And the price of Bitcoin goes down more, they're going to be less solvent. They may go insolvent. So they're going to have to sell even more Bitcoin that they have on their balance sheets. So you see that death cycle. So things are pretty bad. So that's why I wanted to talk to you today. I might have missed something because there was a lot to talk to you about. But I wanted to tell you that this could be the beginning of this is a tipping point of what could be a death spiral in Bitcoin mining. Now, if you recall a few weeks ago, I said that the sentiment was good in both Bitcoin and in equities and that the market could go up. And I still believe that. I still believe that equity prices could go higher and Bitcoin prices could go higher, but only for the short term. I think we're at 20,000 right now on Bitcoin, but so maybe we go up a few thousand. But after that, I think we're going down again because we have these other longer term negative factors like macro factors. Remember, the Federal Reserve is going to be probably like 90% chance of raising the federal funds rate by 75 basis points in the next 2 weeks. And then another 50 basis points for the next meeting. So this is going to sooner or later force stock prices to go down. And remember, we're probably going to be entering recession because I talked to you about tipping point in mining. There's also a tipping point with U.S. GDP. We had a very strong GDP growth, but the ISM survey data already hit that tipping point where it's declining. And so it looks like we're going into recession during the next 3 to 6 months. And if that happens, earnings estimates are going to go down, and And that means that the stock prices are going to go down yet again. And as you know, if stock prices go down, that's going to push down crypto prices. And so there's a whole confluence of events going down. But for today, I just want to focus on the tipping point in crypto mining. Well, thank you all for listening, and please like us, because if you don't, we won't be able to continue these videos. Bye-bye.